Hello, everyone, and welcome to the Market Bites podcast. Hope you're all doing well, enjoying the summer sun wherever you are. In London at the moment, having a quick look at blue skies, which is always good. But we're joined by Bret, Kenwell, our US investment analyst, and it's probably a little bit nicer and hotter where you are at the moment. Bret, how are you doing?
I'm doing good, Sam. Yeah, it's a good summer day here.
Fantastic. That's what we like to hear. How has your week been? All good?
Yeah, the week's been great. It's nice to catch a breather after last week's just a relentless number of events to go through last week.
Yeah, it's a busy one, and of course some great news out of etoro regarding the 24/5 trading in certain parts and the tokenization and crypto assets added to the US as well. I mean, it's a good time, busy time, and I mean, listen, today we're going to talk about earnings, how we've sort of reviewed it, how we see the rest of it going, and it felt like anyway last week was massive, wasn't it? There were so many companies reporting, and then this week there's some big names, or some have already reported as well, and then of course into the future, I mean, you've still got some big names to go through, but we'll discuss all of that. Bret, sound good to you?
Yeah, let's do it.
Nice one. Well, look, first up then, I guess let's talk about highlights. What for you has stood out, and is it a particular company? Is it a particular sector? What has sort of been the standouts for you?
Yeah, I think, for me, there's a few. I think, if we zoom out, do sort of a high level observation right off the bat, we're a little more than 2/3 of the way through S&P earnings, and more than 80% of those firms reporting have beaten earnings expectations. So, kind of coming into this quarter, it was the trough quarter of the years that had the lowest year-over-year earnings growth expectations. To see that number of companies beating, it's on pace for a multi-year high if we kind of continue in this above 80% beat rate. But something like that, I think, is really impressive. I think it's a little bit reassuring for investors who, we've gone a long way in a short period of time from those April lows. So to see such a high beat rate and sort of hearing the guides from these companies and the quarters that they've just reported, I think is kind of a reassuring factor. But, that's sort of a high level observation. If we kind of dig into the numbers a little bit, dig into the commentary, I think one thing that really stuck out to me listening to these conference calls, and that's with the banks, with the credit card companies, really anyone who has that sort of touch point with the consumer. There's like one theme that is continuing to resound around these groups, which is that the U.S. consumer remains really resilient. That's really, I mean, we just kind of talked about that 2/3 number, and that's fitting because like roughly 2/3 of U.S. GDP, it's a little bit more than 2/3, but roughly 2/3 of GDP in the U.S. is from the consumers, from consumer spending. So it's really, really important for the U.S. economy specifically that the consumer is spending, that they are active, that they don't feel scared or afraid to go out there and have fun, go to restaurants, and really just participate by doing things. So to see that is really reassuring. I think it's really a good thing for the U.S., especially as we go into the back half of the year. And then the other thing that sticks out to me is of course, mega cap tech. We've had 6 out of the 7 mega cap names have reported, or 6 of the 7 magnificent 7 names have reported. And, we've got really strong cloud results, whether that's Microsoft or Alphabet, and we have really strong CapEx spending. That theme of investing in the AI infrastructure, investing in whether that's chips, whether that's, building things out for their various services that they provide with AI, we're seeing the spending is not only keeping pace, but it's actually increasing. So I think the read through there is fairly positive. But what about you, Sam? I know you've got some observations too, especially around tech.
Yeah, for sure. I mean, I always, when it comes to earnings season, I'm sure loads of people listening to this will use it. There's a great website, Finviz, and they've got a section on their website where it just shows earning day performance. The lighter the green of each rectangle, the more positive the day is, and the brighter red it is, the more negative that day was. And I sort of squint my eyes and see what color can I see most. And at the moment, I would say it's more green than red, and same for tech as well. So overall, if we were to go back, I don't know, a month and a half, and people start talking about the next earnings quarter, i.e. this one we're in now, expectations were for it to be okay, but I did think it would be better than okay, and I think we're kind of seeing that. That said, companies that have missed being punished. Um, I'm just looking now. I mean, Tesla was down 8%, wasn't it? Amazon got hit a little bit as well, but you do well. I mean, Meta smashed it over 11% up on the day of its earnings. Oracle did really well. Palantir, of course, at the beginning of the week did well, up nearly 8%. Microsoft had a nice little 4% move. So overall, I think it's good. You make the points there about, the spending on AI and that has certainly contributed to, these good results. And I think for things going forward, the next quarter will be where it gets really interesting for me. I read something a while back from an analyst, and they were saying actually they thought this quarter was going to be quite good for earnings. It's actually when we get to quarter three, quarter four, where things might just slow down a little bit as the actual impact from tariffs come through, and maybe in the first half of the year you get a lot of front loading before the tariffs actually get implemented, and companies therefore actually do deliver. It's what happens in the second half of the year that I think might be a little bit more interesting. So all in all, I would say I'm not too surprised, but happy at the same time. I mean, there was a couple of days last week, weren't there, where I think on the Wednesday you had 2 of the Mag 7, on the Thursday you had 2 of the Mag 7, and I think it might have been the Wednesday the market was down for whatever reason heading into the results. Those 2 companies reported they were good, and the Nasdaq within 20 minutes was back at the all-time high again. So, it's I think it's good for now. And yeah, ultimately it's I think if people would take this going back a few weeks, so all is well that seems okay. And just on your comment there about the US consumer, never bet against them. It seems to be whenever the market struggles a bit, this data comes out and they've done pretty well. So, but on the earnings season itself, Bret, has anything sort of shocked you negatively? I know we talked about some companies that have done well, but has anything sort of been like, oh, actually, that's a bit of a shock?
Yeah, I think I kind of think you actually hit the nail on the head there when you mentioned sort of the reaction to those numbers. Companies that are disappointing, companies that are having reports that aren't, is what investors were hoping for or expecting. They're really getting punished. And the companies that are reporting good results, they're being rewarded, but maybe not in the way investors were hoping for. And I think it's kind of like a half glass full, half glass empty kind of situation. On the one hand, you do want to see that enthusiastic reaction, those upside surprises, really be rewarded. And I think, one name that really stuck out to me was Alphabet. They were one of the first Magnificent Seven names to report. They reported a really good number, pretty much beat on every metric that is critical to their business. And, their headline numbers were very strong. And it's the cheapest name in the Mag 7 group. So it kind of has that runway naturally, I think, because of its valuation. If the numbers, were a beat, if it was a strong report, it really kind of had that reasoning to be able to run higher, even though the stock has done pretty well in the last few months. But that gap up was sold lower, and it didn't close lower or anything on the day, and it's held up fine. But we haven't had that enthusiasm with it, and I think that really stuck out to me early in the earnings season, and now we continue to sort of see that pattern where I think if you look at the actual historical data so far through the season, the companies that are beating are not being rewarded. The stocks are not rallying to the point where they would on average, whereas the companies that miss are being punished twice as much as the others, as other years, other quarters. So that's really standing out to me. But given how far we've rallied from the lows, given how much we've gone from April till now, I don't know. We're at record highs. It's not too surprising to me to see some of the a little bit more defensive, profit-taking type of reactions than outright rallies to the upside. But
Yeah, do you know what? I'm completely with you on that. And actually, that's probably another thing that people are considering. August seasonality isn't great, is it? September, not a great month historically for the stock market. The whole sort of back to school and all of that kind of vibe. And then actually, that's something to consider. That even for the rest of the month and the rest of the earnings, that if you're good and you do beat top and bottom lines, there's no guarantee it's just going to keep going and going and going. And maybe we're seeing that with a few names. Google shocked me as well, I have to say. I think that was one where I was like, the report's good. Why is it not rallying? And it didn't quite do it. Another one that surprised me was Netflix. I know it's been on, incredible run, and you go back to the lows that we saw in 2021 and 2022, and the recovery was amazing. Of course it was. But, that beat on the top and bottom line. It also raised its full year guidance at the time and then lost 13% in the month
Yeah.
of July. So that surprised me a bit. I think on the actual day, what was it down? I got it up in front of me, down 5% on the day. I think that probably surprised me a little bit. And actually, not a too dissimilar company to Netflix in sort of the subscription model is Spotify. And that struggled too. And another company that, by the way, has just been on an absolute steam train ride higher from the lows in 2022 as well, just, hundreds of percents off those lows. And similar kind of vibe where the report was good, maybe wasn't absolutely amazing. And sometimes companies with these elevated expectations can just struggle a tiny bit. And also, I think just for those people that are maybe new to markets, another thing to consider, Bret, before getting involved in a stock is looking at the days and sessions leading up into the announcement, right? If they're all super positive, all green candles, and the report is a tiny bit better, you do need to bear in mind that maybe that's already been priced in. Whereas, sort of buy the rumor, sell the fact. I mean, when you just look to review a stock, is that something you would consider?
Yeah, and I think it's fitting you say that as well, because when you look at Alphabet, I mean that stock closed red the day it reported, but it had been on a 10-day rally going into that day. So it's like, how much of that was already priced in, how much of an earnings beat was already priced into that recent run. Like you said, the expectations really play a role when it comes to price action.
Yeah, and another thing, I go back to my sort of early years of investing. One thing that always used to surprise me is if there was on paper what would be a bad earnings report, like I missed on everything, and the stock would rally, and I'm like, what? How does that? Am I reading this wrong? But then, of course, there's the whole sort of notion, well, it's less bad news, and if a stock has just been getting obliterated time and time again, then actually sometimes all it takes is a little bit better bad news or less bad news, and things can recover. And I've been keeping an eye on Nike for a while. I mean, I've got a Nike t-shirt on now, got Nike trainers, Nike socks, Nike shorts on. I love it, but the stock had been smashed to pieces, really down 60, 70, 80% from those highs. And actually, I remember there was an earnings report from last quarter. It came out and it weren't great actually, but it maybe just wasn't as bad as it had been. And again, that's another thing I guess investors do need to keep an eye on. And it can be quite confusing though, can't it, Bret?
Oh yeah. And I think, sometimes I think that's your lesson there is follow the price action's really leading the way. It's the reaction. Sometimes it's not necessarily the news. The news is old. What happening, they might be reporting today, but that Q2 is, over the last several months, they're more concerned over the next 3 months or the next 3 quarters than they are, the prior 3 months. So I think that really is kind of like Netflix, to your point, reported really very strong numbers, but the stock sold off, and it's not necessarily indicative that, the rally's over and this name is going to crash and it's hit its high for the year. But, it can sort of be that short-term exhaustion where things kind of reverse a bit, even if it doesn't seem to make sense on paper.
Yeah, exactly. And by the way, long-term holders aren't always going to be annoyed at that, are they? They might just think, well, right, give me 15% lower to add in again. Give me an opportunity to load up for the long term. And also for those that are looking to hold for 10 years, you're not going to have 40 quarters in a row that are great. 40 price action reactions that are great. So yeah, just patience is key. But I also love that idea of just sort of look at the next day. What's the price action telling you? What have the bulls and bears been fighting over, and how's it ended? It can be pretty telling. At the time of recording, we're halfway, or well, depends where you are in the world. The US cash open has just started, so we'll call it halfway through the week, and the cash open has just started. What names are you looking forward to for the rest of the week?
Yeah, so I think AMD and Uber were kind of if I had to pick 2 names, those were sort of the names I'd be watching most closely coming into this week. Of course, they've already reported, so it's not quite fitting to your question. So I guess looking ahead, I would say the Trade Desk and Datadog really stand out to me. Both names were added to the S&P last month, which was sort of interesting situation. Both kind of topped out in December and then went on these very big pullbacks. Trade Desk fell like almost 70%. Datadog fell 50% from those highs. And I think one thing that, for me specifically, kind of observing the market, we haven't seen that return to growth stocks necessarily, or we've seen it, but it's been in these sort of boom and bust periods since the last bull market. And the S&P, the Nasdaq, they've done very good at sort of trending higher. Of course, we've had a few scares and pullbacks along the way over the last couple of years, but by and large, they've done really well. We haven't seen that consistency from growth stocks, and so I want to see if these stocks can report good numbers and then have good reactions. I think kind of tying into the theme we were just talking about over the last few minutes, but I want to see if they can have a good reaction to good numbers and see if we start to get some, maybe in different scenarios, maybe more of a Datadog situation, but see if we start to get some of that AI trickle down kind of into their business. So it'd be interesting to see how those names react for me. What about you?
Yeah, well, great shout. I completely sort of not ignored them, those companies from my watch list, but now I'm going to be keeping a close eye on it. So cheers for that. It's something I've been able to do for today. My answer, I'm just actually looking at the earnings calendar now in front of me, and it's an interesting one. If we had this conversation 24 hours ago, like you said, AMD would have been in there, maybe Supermicro would be in there as well. Open Door, by the way, could have been one to keep an eye on just because the whole sort of retail frenzy around it. Snapchat obviously reported yesterday another poor quarter for them, or at least reaction to that quarter. I mean, my answer would be I want to keep an eye on Duolingo. I think that's a really interesting company there, just for the education side of it, and I want to see whether they can continue to perform well. And Vistra Energy, I think, could be one that I look at along with Pinterest. I mean, McDonald's would have been one. They've obviously reported this morning. They're up about, well, no, market's just open. They haven't reported longer. They're just over 1%. But they're a company where you look at sort of the last 6 months and it hasn't really done much, hasn't really gone anywhere. It's needed a little bit of a push. Maybe this is going to help it. I'm just having a quick look at their earnings. They beat revenue topped estimates as well. US sales rebound as well. So yeah, it looks to be okay just on that. So I'd look forward to that. But going back to the question, Duolingo would be top of mind, and then maybe sort of Vistra Energy to see how they get on. But now I'm going to copy you and say the Trade Desk instead. So cheers for that one as well. Right, the biggest name hasn't reported. So how important is it? Is it the be all and end all of earnings season? Is it as big a number as the next inflation print? Is it as big as a jobs report? What do you think?
Yeah, I think that's a great question. That's a great way to kind of frame it. It feels like the Mag 7 has sort of just naturally, by how things have progressed with Nvidia over the last few years, it's almost like they've saved the best for last now in the earnings season.
Yeah.
You get all of them at once, usually like in the same week or the same 2 weeks, and then you wait a month and then you finally get Nvidia's numbers. So that's kind of like an interesting dynamic now. But I mean, with a $4 trillion market cap, it's the biggest name out there, literally the biggest name. And it commands a lot of power within the indices because of that size, because of it. It's like a big anchor now in the S&P and in the Nasdaq. So yeah, to kind of answer your question, I do think it's as important as some of those big reports we get around the economy and around inflation. Maybe at certain times of year, those numbers will certainly take precedence. But when we come up to an earnings report from Nvidia, it's not just the biggest company out there, but it's also the face of AI. It's the face of AI chips. It's the face of AI software. It's the entire movement is really tied to this name. So from that idea, and given how well that AI theme has done over these last quarter, over these last couple months, I think it's really important right now.
Yeah, I do. I think it's massive. And actually, by the way, we go back to the first quarter and the earnings season in around that, from quarter four, and insights about going forward guidance. There's an argument to say that Nvidia's earnings helped bottom the market in April and so on. That kind of like we looked at their report and like, okay, they're still doing well. So it's one of those ones, isn't it? We've seen historically, as you said, they're always the sort of one of the last biggest name to report. It's like going to watch a heavyweight boxing match. You get all the undercard and everyone's waiting for this one. But, it's one where if the market struggles for the next couple of weeks and then the earnings report comes out, it's good. The market will brush off the last 2 weeks and go higher. If we trade well for the next couple of weeks and Nvidia's report is poor, I don't really see the market holding up straight away, and it's going to come under pressure. People start panicking, and you know how quickly, the market can run with a narrative and turn the other direction. So yeah, I think it's big. Looking forward to that. Let me actually get the exact date, unless you know it off the top of your head.
I don't have it off the top of my head.
Right. Okay, let's get it. Hopefully it's been announced. Earnings date coming up for you all, August the 27th. So we still got, 19 days? No, 21 days. Awful maths. 3 weeks today, 3 weeks Wednesday for everyone listening. So anything that happens in between that, okay, fine, the market will move. But that's the big one. So we'll make sure to review all of that for you in 3 weeks' time. Bret, as always, great to chat and catch up with you. Thank you very much for coming on the podcast.
Yeah, always a pleasure. Always a blast.
Take care, everyone. Speak soon.